let me come to you now. And I want to pick up on one of the points that Mr. Garg made. You look at what's happening with the Indian stock markets, and we've touched new record highs today as well. And this is despite the fact that we actually haven't seen foreign investors putting fresh money into the Indian equity markets. It's largely been driven by domestic inflows, at least over the last few months. And concerns on valuation are completely being ignored at this point in time. One is the equity side of the story, and the other is the foreign direct investment side of the story, which continues to be very, very robust, in fact, at record highs. How do you explain the divergence between how foreign investors seem to be viewing India and putting their money where their mouth is, and what's happening on the domestic side?
First thing about over-leveraged. I think we should keep one thing in view, that is, if you're looking at debt-equity ratio, the debt doesn't change with changing equity valuation. But if the equity market expands, you will find that the leverage ratio is coming down. And second, you brought out the point about excess capacity. Indeed, capacity utilization is not full. But there's so much technological overhaul taking place. I may be having a factory, but that factory is obsolete. So though it can produce more, I want to change it. New products coming in. And that brings me to the foreign direct investment. I personally believe that foreign investors and Indian investors are motivated by the same motive, which is profit. No one does it for love. So the fact that foreign direct investment has gone up from 28 billion a few years ago to 44 billion in the last 2 years shows that the foreign investors are smelling profit somewhere. So if they're bringing in money, I expect that this money is also going to come from domestic investors. Let me just add one more thing, that the NPA question that we are worried about. Lots of things are unclear. Recapitalization bond. There is a problem of how the IMF treats fiscal
from an accounting point of view,
and how India does. In fact, to tell you the truth, India is much more conservative. If you go by the Indian scriptures, it says expenditure less non-debt receipts. An expenditure is an expenditure. Doesn't matter whether you're buying a house or you're spending it on chocolate. Now, what the government is going to do, I don't know. So if Indian economy starts growing at satisfactory rate, and when I say satisfactory, there is a disjoint between what you guys think and what we guys think. You give us kudos when we grow at 7%. We go into mourning when we grow at 7. We say, what the hell is happening? I mean, the 7.
That's the youngest.
So if the government and the authorities do live up to our expectation and growth speeds up to 8-9%, I think Mr. Garg will be able to sleep in peace.
Are you being able to sleep in peace, Mr. Garg, or are you up at night wondering where you're actually going to be able to close this financial year, and whether you're going to be able to achieve 8% plus?
There's no time to be living or sleeping in peace here. We always want. But let me, I think what Ashok said was very nice. There's another trend which you would find very interesting and happening for good. The financialization of savings in India is very clearly seen. You mentioned that while for last couple of months, the foreign investors have withdrawn money from the equity market, but it is the domestic investors which have come in big way. See the flows in mutual funds, the direct investment and all. So a lot of savings are now turning into financialization, which is good, which indicates formalization of economy, which also indicates the less cash kind of environment which has got created. So which is contributing. And just to clarify on the treatment of the recap bonds, if these are issued from the government, they would be a part of the fiscal deficit, but they wouldn't actually be contributing to anything to the fiscal deficit as such, because there is an investment compensating coming on that.
Right.
So in real sense, it doesn't lead to any sort of increase in demand for goods and services. So therefore, there is For the economy, there is no effect.
Okay.
But for the fiscal side, certainly there would be effect.
Let me pick up on the point that you made, sir, about moving towards a less cash society. And this is something that not just in India, but around the world, people have spoken and written and are still analyzing the full impact of what India did on the 8th of November last year when the Prime Minister talked about demonetizing our high-value currency. We've got the 2,000 rupee note back. We're on the cusp of the first anniversary of demonetization, which the government now hopes to mark as the anti-black money day. So my first question, what next now? Because, the narrative changed from black money to digitization, and which is a good thing, and I hope that the digitization effort will in fact continue. But what next now on this aspiration of moving India to a less cash society, and what should we expect on the 8th of November, and where does the demonetization exercise leave us at the end of 1 year?
First of all, I would like to say very clearly, the narrative didn't change. It was part of the same narrative. There were a number of objectives which were mentioned from, as part of the demonetization exercise. So it was not changed. It was building the same narrative. I'll give you one number for you to sort of ponder over. That does this indicate a substantial impact on the black money potential and the black money as such? We had as much as 15.4 lakh crore of high-value notes, and we define 500 rupees and 1,000 rupees note as the high-value notes on the day the demonetization was done. They were growing at about 16-17%. So if nothing was done on that day, today it would have grown to something like 18 lakh crores, right? And today the high value notes, which is 500 rupee note as well as 2,000 rupees note, is only about 12 lakh crores in the economy. So there is 6 lakh crores, about 50% less than the stock of the high value notes, which is today in the economy. And anybody would tell you that if any black money was stashed in the notes, it was only in the high value notes. So to that extent, it has been a substantial reduction of the potential of black money.
Yeah.
Secondly, as you saw, a lot of money was deposited into bank accounts. They were suspicious. Those are being investigated, and we have very, very good stories of where those monies were unaccounted, black kind of thing, and they are leading to more tax payments, more penalties, and more recoveries. So to my mind, even from the black money point of view, this was an enormously successful measure.
So what can we expect on the 8th of November?
We celebrate.
Okay, we will celebrate is the unequivocal assertion there from the government. But Naina, let me ask you now, on the issue of formalization, more transparency, which the government says was the attempt through demonetization and, of course, moving towards a less cash society. Yes, cash to GDP ratio has come down since demonetization. What happens as far as the suspicious transactions are concerned? What will this result to in terms of, the tax to GDP is still a question mark at this point in time. But what do you see as being the biggest benefit of demonetization?
Shireen, I've been critical of demonetization, so I don't want to get into what I see as a good points. I really don't see much in terms of how to defend that decision. But I do give credit to the government for wanting to maintain a sustained attack on different elements of the black economy. This attack on shale companies, the fact that 150,000, I think that number of people have deposited cash in very large sums, which I presume the tax department will hopefully show some results at that point. Then we can say there is a positive benefit. The whole attempt through the GST system to make the economy move more towards an organized fashion. I think the initial little push towards organized retail, which would help, supply chain management and larger suppliers, and all of these together would I think, help to make this a less cash economy. So all the indirect ways in which you're doing it will get you the result, and you would have got all those results, frankly, without demonetization.